guys doing? It really does. This counts. Keep us all alive and safe and happy. And it's live Salcedo disco, I tell you. Oh. How you guys doing? I hope you're doing fine. Before I start, please like if you like, subscribe, share if you want more of this material, and if you want me to do it more. This presentation is a bullish case for the dollar using market sentiments and safe haven bets, which I think the safe haven asset class now is the dollar. So I'm bullish on the dollar using dollar technical analysis and other sentiment indicators. Okay, I start with something I discovered some times ago, and I did have a presentation. Maybe one day somebody might know what it is and maybe steal it, but you heard it here first. Please don't take it from me. I call this the disco signal, and this is the equity put to call. This is the ratio. This is the close of Thursday. So today's close is not updated yet. So by closing Thursday, we have 59 ratio, which means people are getting nervous now. And the change was 21% in one day, which indicates a sentiment shift. Okay, so that's for this ratio. So what I'm arguing for, if you are not Kareem and Abdul Jabbar and Abdul Blab, and you don't know me, this is only moving averages for the equity protocol. This is the 50-day in the blue and 20-day moving average in the red. So in my discovery, which is very, very, very accurate, and most of the time it's a leading indicator, once the 20 gets over the 50, there's something is going to happen in the market. It's a sell-off usually. It does not mean a meltdown. It does not mean a total collapse. It means a sell-off. And once these things go the other way around, as a bearish crossover between the 20 and the 50, the market rallies. You could check it on your own time. Okay, so equity put to call only using a 20 and 50-day moving average. And this is Thursday, and I put this in LinkedIn yesterday, and for the two people that follow me on Twitter, and the market was up 50 point at that time. Now it's closed 300 point in the red. So it's definitely very, very good indicator. So we're finishing with the equity put to call. Let me look at the VIX. Another discovery I discovered in the VIX, which everybody could know this stuff. This is easy, but some people don't have the eyes. But it's really, really easy, and it's extremely easy, by the way, and it's extremely accurate too. So we can read this. So every time you have a severe bullish divergence between the price action and the stochastic, you have to, there will be a volatility in the market, and this thing confirmed with bullish MACD, and good things happen in the VIX. It goes up 20, sometimes 50, sometimes 60%. And the longer the duration, the sharper the rise. This, I posted this some times ago, and it did this number I posted it from 16, and the high was 21. So this definitely, to almost 22, this is definitely a sharp rise in the VIX. Okay, so now the argument is the same. Longer duration, bullish divergence in the VIX, and also bullish MACD if it has to repeat itself, which 100% of the time in the past it resulted in sharp rise. So I use equity put to call, only the moving averages, the 20 and the 50, and I use the VIX. So let's look at the dollar, the Dow Jones. So today you have a bearish divergence, high in the price action, higher high. Here you have in a stochastic high, an equal high, or maybe a lower high, just a little bit lower high, and that's it. And a bearish engulfing, and you close below the 10-day moving average for the first time since 8th of July, which is not that long, but it's not very bullish. Sometimes you could look at the Nasdaq Composite, and the bearishness is more clear. So you have the same thing, bearish divergence, and you close below the 10-day moving average for the first time since 3rd of June, which is a longer time, and before that it was 20th of May. So it's very significant. So you close below the 10-day moving average. You made a lower low than yesterday, and a bearish MACD, and a bearish divergence. Where is it going to, where the buyers will step in? I really don't know. There are so many places for the buyers to gather, but I'm not here for that. I'm here to illustrate a bullish case for the dollar. So I use the indices. I use the Dow Jones. I use the Nasdaq. I used the equity protocol. I use the VIX. Now we look at the dollar. What I don't like about the dollar here, if you know me, if you're Kareem and Abdul Jabbar, this is the UUP, by the way, the ETF for the dollar. I don't like it when the MACD in bearish crossover. So I will be really happier and comfortable when this crossover take place. I'll be really bullish on the dollar more than I am now, even though I'm bullish now. But this makes me uncomfortable. You always trade with the direction of the MACD, and now it's bearish, but it's very close to being bullish. Okay, so what's bullish about UUP or the DXY? UUP, the ETF for DXY, it made a good follow through on the 10-day moving average. It went up, and also it still proves that it is the ultimate safe haven asset now for many of the other, sometimes the other safe asset classes like gold and bonds. Now both of gold and bonds are selling off. So this is another proof. If the market goes down, dollar would go up, and you can see why. Let me look at the weekly time frame. So what I see here at the UUP, which is the ETF for the dollar, I see a beautiful bullish crossover in the MACD. I see a beautiful, strong stochastic, and I see the RSI over 50 in the weekly time frame, which is very, very bullish. Okay, which is that one right here, 57, which is very bullish. I see high basing. Usually the high basing is extremely beautiful, bullish action. So in a weekly time frame, it is extremely likely to make a new 8 months high, and this would be the first time you make a higher high since the sell-off that started in 2020. Okay, so this will be significant. If we make a higher high by next week, that means the bear market is over as far as the technical chart is concerned. You have an Eve and an Adam double bottom in the UUP, which indicates the buyer stepping in, and we will have low, higher low, a little bit lower low, but you will have higher high. In the past, you were making series of lower lows, so this is going to be a new uptrend for the dollar in the weekly time frame. let me look at the DXY itself. So I tweeted, I think last Wednesday, that what I like about the dollar now is the bull in Japan is in a pipeline formation, and this pipeline formation usually, which is when this thing get tightened, this pipeline formation is most of the time it's very brief, and once the MACD goes in a bullish crossover, I think it will result to the upside. If we look at the dollar and my Elliott wave counts for the dollar, it's very I'm not extremely comfortable with it, but I'm comfortable with it now. So far, so good. We might have the 5 waves down the long term, A, B, C, 1, 2. So we are working on the third wave. So we had 5 waves up, this wave 1, and we might have concluded wave 2, which is really, really hard to prove so far. But if we make a higher high, that means we might start the third of 3, which is very powerful. And this might take the price action at least to 95 very soon, fast and furious. So this will show a lot of safe haven, a flight to safety going to the DXY, which will be perfect for the sell off in the market. So the market goes to dollar starts the 33 and it goes up. I really hope you like this presentation. Please like if you like. Please don't forget to share, and please do remember, nothing is higher than disco, nothing equals to disco. Disco is forever.